Today's biggest market takeaway is simple. Rates have moved a little bit lower. Northern Virginia buyers have more homes to choose from than they did a year. And that doesn't always mean home affordability. A lower rate helps, more inventory helps, but the real decision still comes down to three numbers: your mortgage payment, cash to close, and your long term carry cost that results in figuring out what a safe and comfortable DTI, debt to income, is for your personal wallet. Hi, my name is Kevin Retcher. I'm the owner of First Meridian Mortgage, owner of KSA Insurance Agency, and a licensed realtor with Jobin Realty. And you're watching The Till. If you're new to my channel, The Till stands for Truth in Lending and in Life, and I want to help you ring your register by saving you money. So let's get into discussion on rates first. First and foremost, Freddie Mac, Fannie Mae had rates at 6.67 this week, slightly below the 6.69 that the Mortgage News Daily is actually putting out right now. Also want you to pay attention to the 30-year fixed on a VA loan. About 40% of my business is helping veterans. I was actually ranked in the top 100 loan officers that is a veteran in the country. I was proud of that 2 months ago by Scotsman's Guide. Here's the thing. You want to check live rates on First Meridian Mortgage's website. Go to the live rate quoting engine, put in your criteria. If you're a veteran, put that in. It'll give you VA rates also. You can see my rate today was 6.375 with 20% down, 780 credit score, and on a VA loan, actually under 6%, 5.875%. Here's the thing. I have about 20 different investors. This is a live rating engine that goes live, and you can check interest rates. I don't have a blocking mechanism on here, so you can check rates on a regular basis using my website. Point two, those statistics. The market analysis at NVAR had Northern Virginia have 3,025 more units in July. That's up 19.6% than June. 41% were condos, 33% were attached homes. Here's the thing, single families were down 2.5%. So depending on if you're looking for a condo in Arlington, Fairfax, Falls Church, looking for a condo, inventory is up, you have more time to evaluate those individual condos. But I'm going to give you some key tips that you truly, truly need to listen to right now, okay? Freddie and Fannie changed their rules on condos. They increased the requirement for their budgets, the reserves, from 10% to 15%. You may see condos actually stay on the market here over the next 6 months to a year. You actually may see prices decrease, because what is bound to happen is you're going to start to see HOA condo dues actually have to be increased, maybe some special assessments. So you're going to have to pay particularly good attention to these HOA documents. But what's highly important here is the advice that you're being given during this contract process. As a person that's a licensed realtor and a mortgage guy, a mortgage broker for 30 years, this Virginia contract right now has a few things in here that you need to understand if you're a first-time home buyer. One, financing contingency. I would not waive your financing contingency at all. And I would also check the box for the financing contingency. Normally it says, financing contingency up in 15 days, appraisal up in 14 days. I would do the automatic extension, not the automatic expiration. Here's the thing. 15 days go by, maybe you get HOA documents a little bit late from the seller, and you've got to evaluate whether or not this budget meets the appropriate needs, make sure that there's not any litigation, things of that nature. What you don't understand as the consumer is you're getting these HOA documents and they all look fine and dandy to you, but the lender actually has to get a questionnaire filled out that has about 40, 50 different questions, and it goes over the budget also, right? So you could have one of 50 questions that could make this ineligible for Fannie Freddie, but that budget is a big thing, and you're going to be needing to look for any special assessments, things of that nature. So the only way that you should ever waive your financing contingency right now on a condo is if you can pay cash and you're willing to pay cash. Outside of that, do not waive your financing contingency. Do the automatic extension, not automatic expiration. Thing about it is, all agents want your contingencies to be over as soon as possible. For me as a lender, I would like to get them out of the way as soon as possible, but I would like you to keep your contingencies as long as possible to protect you. So the other thing about that, this news, right, with the statistics, inventories being lower for single-family homes, so that's still a tight market. So you could still have situations where you could still be bidding things up, but not bidding up as much as possible. Point 3, time on the market, right? Things being a little bit longer on the market in various different areas. Here's some statistics you can look at while I talk. Time on the market may give you the opportunity. Sellers are thinking about cutting their price. Agents have to have that tough conversation with them. You may have the opportunity to actually get some seller concessions toward closing cost. Had a recent deal recently where someone asked for $19,000 seller concession after the home inspection, right? And in general, he could only use up about $14,000, and then other than that, I'd have to spend this money on points or a buy down. And so what I want you to understand is talk to your loan officer, find out exactly what your closing costs and prepaids are. If you're thinking about asking for a seller credit, you don't need to go for the gusto and have every one of your closing costs and prepaids paid for. I prefer also splitting some of that up and going for a lower price. The cash to close seller credit, if you're getting 10 grand toward closing cost, allows you to keep 10 grand more in your pocket. But if you also asked for 5 grand lower in price, it's 5 grand less that you have to pay for. But if you asked for $19,000 and could only use 14, I'm going to tell you to lower, go back to the seller and lower your price by 5 grand or 6, and make sure that we use up all that money. In closing, that was 3 points. This was your Thursday update. My name is Kevin Retcher, owner of First Meridian Mortgage, KSA Insurance Agency, and a licensed realtor with Jobin Realty. If you ever have a question pertaining to mortgage, insurance, or real estate, give me a call. Talk to you soon. See you in the next video.